Okay everyone, welcome back. Today's video I'm going to be explaining and showing what a fair value gap is, or FVG, and how you can use them in your trading in multiple different ways. Okay, so starting off, there's two types of fair value gap. We have a bullish fair value gap, or BISI, or bearish fair value gap, or SIBI. I'm going to be referring to them as bullish and bearish fair value gaps. I don't call them BISIs or SIBIs, but feel free to call them whatever you want. There's many different terms for the same thing. It's a fair value gap, or FVG for short. So as you can see on this bullish example here, it's a 3 candle pattern, and we have the first candle here, the second candle, which is actually the fair value gap candle, and the third candle. So as you can see here, the top of this first candle, the top of the wick, and the bottom of the wick of this third candle do not overlap. When this happens, it creates a bullish fair value gap. Or when the bottom of a candle and top of a candle don't overlap, it's a bearish fair value gap. This candle could be an up close candle, this candle could be a down close candle. They don't all need to be up close or down close like they are here. Just the two wicks cannot overlap. So for example here, if this wick was up here, they're not overlapping, or they are overlapping, sorry, there's no gap, we don't have a bearish fair value gap. Whereas here, you can see this and this are not overlapping at all, so we've got a nice big and obvious fair value gap. If you needed to go over that a few times, watch the video back. It'll probably be easier seeing more examples throughout the video anyway, which I'm going to be showing you from multiple different examples. So how can we use these fair value gaps? There's 3 ways I use fair value gaps. First way is to find displacement / volume in the market. Again, this comes with many names: displacement, volume, institutional order flow, institutional sponsorship, and there's probably many more, but I'm going to be referring to it as volume and order flow mostly. We can use it as a higher time frame PD array to get a narrative, and we can use it as an entry. These two in my examples go hand in hand, so I'm going to show you how to use it to find displacement first, then I'm going to be showing you the entry as well as how to use it for bias. So here you can see I've got another diagram showing you how we can use fair value gaps to look for displacement / volume in the market. So let's imagine this is a 15-minute chart, all these candles are 15 minutes, and this low here is a 4-hour low. It could be any time frames, that's just the example. So we've swept this 4-hour low right here, price has closed above it, the first good sign to see, and now you can see prices moving higher, leaving behind these fair value gaps. As you can see, these wicks are not overlapping, neither are these, and neither are these. What this shows is there's a lot of volume in the market, and the market's leaving behind gaps. We can use this to improve the level of confirmation this low has of being a level that could potentially be sending us higher, as we have this extra confidence shown in volume. So price has come here and it's shown a real willingness to go higher, which is, if we are looking for buyers, something we would like to see. So just quickly before I show you the entry and how to use it for high time frame bias, there's 3 key areas to a fair value gap. The first one here is the open, and as you can see, between this black candle and this black candle here, we've got a fair value gap as shown with these 2 black lines. Price has come into the bottom or open of the fair value gap and has rejected. If this was a bullish fair value gap, this would obviously be the open, and we want price to come into it and move higher. So this is the first point of rejection, kind of the first level of defense for a fair value gap. Price come into the open, respected it, we displaced lower. Again, the displacement shown by this fair value gap, and price continued lower. So the second area of defense, so to speak, is the consequent encroachment. This is also called the equilibrium. It's also, I sometimes refer to it as just the 0.5 or the middle, the midpoint, anything. It's just the middle of the fair value gap. So as you can see here, this is the top, this is the bottom, and if we draw a fib, you can see here is the equilibrium or consequent encroachment of this fair value gap. So this 0.5 is bang on between these two. As you can see, if we were just using the open, price closed above, so you might be thinking, oh, it's not going to hold anymore, let's start looking for longs, for example. However, price came up to the consequent encroachment, respected it, even though it closed above, it respected this area, and then as you can see, we displaced lower, shown with this fair value gap, price moved lower. You probably could have had a nice position here. So now the final one, the final line of defense is the fill. So as you can see, this wick went through and above the fair value gap. However, you can see the body did not. If we close through and have show displacement, if we did close up here, as you can see, that would be a big aggressive candle closing through. I already have a video on it, but this would become an inversion with fair value gap. After you've watched this, I would definitely recommend that, as you can combine these together and you've got a great combo to use to get a narrative. But either way, moving on, we respected the top or even the open of this fair value gap here, this other one, and then price moved lower. But we're still respecting this as we're not closing through it. So they're the three main areas of a fair value gap you want to look for price to reject off of if you are going to use it to take a trade from. Okay, so here's the final of the three ways to use a fair value gap before I jump into some live chart examples. So this is going to be showing you an entry model with a fair value gap and how we can use fair value gaps to get a high time frame and intermediate time frame bias. So starting on the daily chart here on NZD/USD, you can see we displaced through this high and price left these fair value gaps behind. Again, this is showing displacement. If price comes back into these areas, they're really good to buy. Now you might be looking and thinking, with this candle, oh, we came back and rejected. We did. You might have took a buy on this day, you might have won. You might have tried to take a buy on this day here. I don't know what the lower time frame or DXY looked like on those days, but you might have lost. That's trading. But as you can see from the examples I'm going to show you, this is a very strong PD array to use to take price for price to move away from. So as you can see, we've got this daily fair value gap down here. Price came down into it again, filled the whole thing, even went lower, but closed above and quite a bit above. We had a really nice rejection here. So coming into this day here, it would be very nice to look to take price higher. So dropping down to the 1 hour on the intermediate time frame or just a lower time frame, you can see price came into this daily fair value gap. We was actually displacing down into it, but as you can see, price slowed down. We inverted this 1 hour fair value gap right here. Price again showing displacement, made two fair value gaps, this one coming into it, this one again we displaced through the bullish fair value gap with this 1 hour fair value gap, which price then went into. And this happens, it's a very nice sign. We can drop to a lower time frame and look for our entry. So now we're down to the 1 minute chart. As you can see, this is the 1 hour fair value gap. This bigger kind of box on the chart is the daily fair value gap. And as you can see, again, we came down here, price moved up. We had this market structure shift, which left a fair value gap. It's a nice double confluence. We're also trading above this, like I showed before. We don't know where in the fair value gap it's going to respect. So we want to see it respect a part and then move higher. As it did here, we enter off the top, stops just below this low, and you've got a very easy 2R, only really using fair value gaps to get the whole narrative and entry of the trade. Okay, so I've jumped on the charts to show you an example. This example is on USD/CHF, and is actually a trade I had drawn out today, but unfortunately I didn't take it. I took GU, ended up taking a loss. Game's a game. So I'm going to walk you through this one. On my list was a really nice trade, and again, how it used fair value gaps and how you can use them to your advantage to take trades like this pretty much every day. So if we jump up to the 4 hour chart here, you can see, if I move this so you can see it clearer, we had this bearish 4 hour fair value gap, also coming out of the daily fair value gap. As you can see, price came up into this 8 times, and every single time we respected it with the bodies. We didn't even, again, we could have closed into it, but we didn't. We closed below every single time, even up here. So this shows me if we do displace lower, this is a very nice zone to sell from. We're in a very good place to sell up here. So as you can see, we did start to move lower. Drop down to the 1 hour. Price is showing displacement with this 1 hour fair value gap right here, which we moved lower from. We did end up, if I zoom in here, as you can see, we just tapped into the open of this fair value gap, or the bottom of it, and then we have this huge rejection down. This is really nice, and is a really good sign. We're respecting this, and price is going to move lower, obviously paired up with all the other analysis. And I would imagine, yep, if we drop down to the 15, we had this fair value gap coming away from it, and on the 5 there, even clearer, we had this, a good sign of displacement. So if we look to the 1 minute, which is my main entry time, you can see I entered off this 1 minute fair value gap right here after we had the market structure shift, or sorry, could have entered. Price tapped into it here and then displaced lower. You had a really nice, perfect exit to our trade right here. What I am going to do is, I've just seen there's many entries you could have took off fair value gaps. So from when we came up into the 1 hour, which was up here, and from when I entered, I want you to pause the video, spend a few minutes marking out all the fair value gaps in this little bit of price action that you could have entered from. Okay, so here you can see there was actually 4 entries in this leg, including this one I took down here. I took this one as it had a market structure shift. However, we came from this 1 hour, so using your own analysis, your own research, your own thoughts and opinions, you could have easily entered up here when we had this fair value gap coming down. Could have had your stops just above here, and you could have took this, I'm assuming, almost 7-hour trade right here. You could have also entered off this fair value gap here, and again, although we did close above, looking at everything I've showed you, a 1 minute fair value gap being disrespected is definitely not enough to completely change the bias of what I showed you. So you could have entered here, even though it did close through, you would have been fine. You could have entered right here, had a 4R almost. You also could have entered here and had a 2.5R if you targeted the same area I did. And that was obviously my entry. So just in this tiny little leg on this Monday, which I've decided to record this video, there is a whole setup on just one of many pairs which had a fair value gap for your high time frame bias on the 4 hour. We had the 1 hour FVG, which showed displacement, and we came up back into it. Then we also had the 5 and 15 minutes, which you can be used to help you show more displacement, and we had 4 entries on the 1 minute, and that's just on one chart on the London session. So I'm going to show you one more example before we wrap the video up. Okay, so here I'm on GU. Now I've got another example. As you can see, we swept this low and respected it. I'm going to have a video coming out on liquidity, so if you don't understand that, don't worry. I'm going to have a video, probably be the next video I make that isn't a trade review, showing what this is and how to spot this and how to use them. So as you can see on the 4 hour, if I quickly move this, we had this fair value gap after here showing displacement and showing this high like I showed you in the example before. High time frame high right here, we displaced above with fair value gaps, it shows volume. This is a nice place to buy from. If we drop onto the 1 hour, you can see we also had this fair value gap right here from this high to this one, which we came down into here, filled it, closed above, price respected. When I see this, I'm thinking, okay, we've got 2 fair value gaps here. Let's drop down to the lower time frame and potentially look for some entries. Okay, so now I'm on the 1 hour time frame. You can see we came up out of this 1 hour fair value gap. We had this massive bit of displacement here above the 4 hour as well. Price just tapped into it, so you could have had a great entry, no drawdown, and price went straight up towards a 2R, which was right here. So again, another beautiful trade. I'm going to do the same thing. So in this price leg up until where I entered, I want you to mark out all the bullish fair value gaps you could have entered for, because this one's quite interesting. Okay, so here you can see there is 4 others, not including the one I entered. This one here is really small. You would see it on the charts when you're back testing yourself and tape reading, because you can zoom in. But if you missed that one, don't worry. If you zoomed in, you can see it's a really small one right here. So this one here, this would have been a really nice entry, but you may be looking at these two, and this one specifically and thinking, I might have got stopped out taking this. So if you remember before, when I was talking about the 3 key zones, we don't know firstly if a fair value gap is going to be respected, and secondly if it is, where it will be respected from. Even though we did feel this, if you remember the other examples I showed you, price went way lower, And even if we use this 4 hour, for example, and I show you on a 1 hour chart, price moved way lower. So we don't know how low it's going to go. All we want to see is it be respected by the bodies. So using that, this one here, you could have entered, you may have got stopped out. However, if you used this small one or this one, we was trading above this 1 hour fair value gap. Even this one really, because we did close above it here. So these three would have been fine. However, these two, although this one would have won, you did have more drawdown. It went low to your stop loss. Depending on even where you put your stop loss, you might be putting it here or below the fair value gap, you would have got stopped out. Whereas these three here, if you even use the fair value gaps as stop losses, the bottoms, you would have been absolutely fine. So this goes to show the importance of, we're not trying to pick bottoms or tops in the market. We're not trying to say, oh, it's going to reverse here. We want to see price move away and then say, okay, we can catch this to the upside with this example. So price closed above it here on the 1 minute with this candle right here at 357. We then tapped into it, move higher. We was trading above it here. We then had this small fair value gap, which price went into and moved higher. This one, which is the one I use and is the one I draw out, came straight to mind. As you can see, we're trading through both, and we've been trading through this 1 hour for a good few candles here. It's not like we just closed above and we're going to go back down, then come higher. We was moving away from both. We also got a close, as you can see, 4. So the 1 hour closed here and it closed above this fair value gap, which again is an extra confidence as we're now closing above it, which is a great way to see it for us moving higher. This trade here, if I were to show you, as you can see, you could have even entered down here, remember, but eventually rode up to well over 20R if I just quickly play through the replay for you. As you can see here, this trade went over 21R and is still riding. You would still be in this trade today if you took this on the 3rd of March. So it's over 20 days and all from just a few fair value gaps. So I hope this video has helped. It showed you the importance of fair value gaps and hopefully there's something you can add to your trading. I've got a few more educational videos coming up. As you can see with my trade reviews, I don't use that much analysis. I use the same few things as they work for me and I just use them over and over again. So I'll continue to be teaching those. I've taught you pretty much everything. Then I've got some psychological videos coming out and obviously more trade reviews. So I hope you enjoyed. If you had any questions, leave it in the comments. Maybe I can make a video on it, or if it's something I can quickly answer, I'll reply to you. And yeah, make sure to like and subscribe and I'll see you next time.